All right, folks, trust you're doing good, guys. I'm Optimist. So, quick one. In this video, we'll be talking about Killzones. Just like I promised, a lot of you guys reached out and said I should talk about Killzones. The concept of Killzones is actually two for one, like one stone, two birds. So, one of the key importance about Killzone is that Killzones can show you directional bias, and then if you have a good working strategy, you can find a way to tag along. Yes, most times you'll be right, some other times you'll be wrong. So that's what Killzones are. So we are going to start a whole new series on Killzones, and it's going to be a whole lot videos about it, because if I should talk about the theoretical aspect of Killzones, it won't really help you. So there's something about time and price, which is something people don't talk about. In 2021, I came up with this phrase. I don't know, maybe it went viral or not, but a lot of people were saying it. The first was, at certain time of the day, price action is unique, and that's the truth. At certain time of the day, price action is unique. If you study one pair like Euro USD, I will always say Euro USD. Now, if you're trading gold, gold doesn't really concern itself with time and price, because gold can move anytime it wants. It can move in Asian session, it can move in London, it can move in New York. So it will be wrong of you to assume time and price, London and New York alone. Nah. But if you're trading pairs like Euro USD, if you stick to London and New York, you'll be able to study a pattern that happens over and over. Now, when I say pattern, I'm not talking about head and shoulder pattern. I'm not talking about that. But you'll be able to study. There is a kind of way price will behave, and then you'll be able to understand that. And then you can be able to store that in your creative mind. And then you can always get that. So that's just it. So if you're a day trader, this is for you. It will show you directional bias. It will give you the key context of how you can start a day, how you can plan a day, how you can write out the trading plan and every other thing for every day. It's always going to be different. Monday can buy and Tuesday will sell. But one of the best way you can understand that is by understanding the kill zones. And to understand kill zones, we have to understand time and price. So let's go over to the charts. So this is EURUSD. Like I said, our base pair, which I'll be using for this series, is going to be EURUSD. Now, mind you, I trade gold, but I trade EURUSD then. I used to trade EURUSD when I used to trade time and price. So, to understand the context of time and price, the first thing we want to understand is the sessions we have. So, we have three sessions. We have the Asian session, we have the New York session. That should be in uppercase. And then lastly, we have, there's one that should have come in between. That's London. Sorry, London comes before New York session. Sorry about that, but I want you to understand that. So Asian is usually the first, London is usually the second, then New York is usually the third. In people living in the US and everything, by their morning when they wake up fully around 8 o'clock in the morning, New York session is where they always come to. But London has always passed. Do you get? So I don't want you to mix it up. I don't want you to mix it up. London comes before New York. Sorry about that. Let me just correct it now before I cause a lot of problems. So London usually comes before New York. These are the three sessions. Now, if you're trading pairs like Euro USD, you have to scrap out this one. You have to remove it totally. You have to forsake every price action that happens in what day. Now, does it mean that the price will move in Asia? Price will move in Asia. There are some price action that will move in Asia, but you are ready to forfeit it. If you're trading gold, you cannot do that, because even last week Friday, there was a price action that happened on gold, and the move started in Asia, and New London and New York could not get retracement entry. So if you miss it, you've missed it for that day. Do you understand? So if you're trading Euro USD, this is your two best friends. That is your two best friends. So I want you to come to these websites to see, well, and what do I used to call it? Time zones. I think just search for the time zone converter. Yeah, this is the one you're looking for. Forex market hour time zone converter. And when you come here, this is what you will have. Now I've set mine to Lagos and everything. And then it will give you, now during daylight saving is usually October. And it stops again March. So we are currently in the daylight saving time, DST. So it shows you 5 sessions here. Frankfurt and London, we consider both as London session. We consider both as London session. Then New York stand on its own. Then Sydney and Tokyo, we consider this as Asian session. Do you understand? Now, I don't talk about Frankfurt. I make sure I focus on London, even though I know both of them overlap. But the overlapping is where the key zone comes into play. That overlap is where the key zone comes into play. And also this Asian session too, I focus on this overlap, and the overlap is where the key zone come into play. So now I want you to just focus on the session. So our London for this time will be focusing on 8 a.m. Some people will tell you it is 6 a.m. Some will tell you, oh, it is 7. I want to let you know that that timing itself is not really relevant, because when you add the Q zone to it, you will always realize that we always come back to the main thing. So the timing is irrelevant. Let's just stick to that. So our London is 8 a.m. Our New York is 1 p.m. Some will tell you New York is 12. Some will tell you it is 2. Our New York is 1 p.m. And our Asian session starts 12 a.m. So let's work with that. Do you get? So I want you to write that down. London 8, New York 1, and then Tokyo 12. That's it. So that is time itself. That is not Q zone. That is time itself. So what is then a Q zone? Michael J. Addison brought about that context. Q zone was what he called it. Q zone. Now, according to that word, it means where traders are being killed. Yes. Usually it's always about seek and destroy. Seek and destroy. This is where manipulation starts from for a day. And one of the usefulness about understanding Q zone is that it shows you where the market is going to. Seek and destroy is what we call the Q zone. Seek and destroy. It is usually 2 hours before your session starts and 2 hours during your session. Now, you know your session. Oh, I've deleted it. Your session is about 8 hours. We are not always focused on the 8 hours. Forex Factory, no. Sorry, I wanted to type Forex Converter. Let me just time zone. The way my mic is placed and this keyboard is placed, it's interfering. That's why I'm making mistake typing. This mic is stressing me. I have to find a better place to position it. So a session is usually around 8 hours. As you can see, open 7, close 3, open 8, close 4, open 1, close 9. So are we saying if you are trading New York, we have to still trade around 8, 9? Yes. Sometimes we trade around 8, 9, but that's usually a short-term trade. So that's just it. So we are focused on the first 2 hours open. The first 2 hours prior, so before the session opened, first 2 hours, and during the session, the first 2 hours. That is our key zone. Let me just leave it. Don't let me delete it. That is our key zone. Do you understand? That is our key zone. So what do we focus on in the key zone? We want to focus to where I say the sheep are being slaughtered. That's what I always say. The sheep are being slaughtered. This is where we focus on, where sheep are being slaughtered. So let's say this is our key zone. It's usually a 4-hour period. Now, sometimes it can be 5-hour period. So it's not really, that precision is not a must. So don't say Optimist said it's a 4-hour period, so I have to focus on the 4 hour. No. So 2 hours before the session opens. So let's now say the session opens here in the middle. So we are going to make that black. So this is where the session starts from. Let's make it black. So this is our key zone. This time period is our key zone. What we are focusing within the key zone is what kind of price action presents. We are focused on liquidity runs. Yes. So prior to that session, we can have price like this, upside, up, down. And then the moment this key zone starts, you can have price like this. Price can just read all this liquidity, and then here we go up. This is where some people will say accumulation, manipulation, and then they are focused on distribution. So that day, during this London into New York, they are focused on buying. But remember, New York can do different too. Do you get? New York can just change it and focus on the sell too. But you will understand that later on. So this is the Q zone we are focused on. How do we take liquidity? Where is it being delivered? Is it a total delivery or is it a seek and destroy? Seek and destroy is what happens like this. This is the overall zone. Do you get? and then something like this happen, and then you see liquidity run like this, and then you see something like this, and then you see something like this again, and then you see something like this again, and then you'll be like, what's going on exactly? This is what it means by seek and destroy. Buyers and sellers are being cleared out. Now, the institutions don't know you are there. In fact, you are trading prop firm, so the institutions are not bothered about that. They just know that liquidity exists around these zones. These zones are the unique point to sell or to buy from. A lot of traders will be trading there. That is what they know. So it's not as if they are chasing you. They just want liquidity. Now, this always happen almost every day. And if you can focus on it on EURUSD, you can get 50 pips every day. It may not be consistent. There will be sometimes you will take losses, but there will be sometimes you will lose too. There will be sometimes you will win big. Do you understand? So that is what kill zones are. So your focus is to focus on the liquidity being taken. Where is it being delivered to? That gives you directional bias. So the fact that yesterday bought does not mean today has to buy. Today has a choice. Today can reverse. You want that to set itself up. Do you get? So that being said, now let's look at some trade examples. Now the first thing you want to do is you can add session, and that brings me to this indicator. I had to find it for this video. Just search indicators. It's actually delineates the sessions for you, FX market sessions. Click on it. If I activate it, you can see the sessions being placed. So I've done mine. I've done my own settings to fit my own parameters. So can you see this is my London? Can you see it starts 7, even though I know my London starts 8, but I've just set it to fit into to add the Q zones and everything to it. Yeah, this is actually 8. This is actually 8. I know it is 7, but look at the time zone, GMT plus 0. So if I should change it to GMT plus 1, the whole parameter we have to change, then the new thing we have to readjust. But no, I want my GMT plus 0. So this one, writing it as 7 a.m. In my own time here in Nigeria, it is 8. Do you get? So you can do your own, set it to fit your parameter, try and error, fix it, fix out, and then you get it right. So let's just focus on last week. Remember, Tokyo is irrelevant, so we are not focused on Tokyo. But prior to Tokyo, you are focused on that. What liquidity is being taken? When we enter into London, now start to understand, are we focused on continuations or we are focused on reversals? That's it. It's best to focus on continuations than to try to catch reversals. That's just it. 60% of the price action that happen in the market is usually continuations. The remaining 40 are the reversals, and that 40s are very difficult unless you have an higher time frame structure. For example, this reversal is because we came to an higher time frame structure. Yes. So it's best to look for continuation move. This reversal was because of a continuation move of this day, but that's another story for another day. So now let's focus on this day. This was Monday. Let's just focus on last week price action, and then I'll show you how you could have made a lot of money last week on EURUSD and all these setups you would have been blinded from. So let's start from here. Look at it. This was 7 a.m. London starts 8, right? So our key zone is 6. What liquidity pool can you see being taken out? Can you see this? This is a liquidity pool being taken out. Where is it delivered to? Can you see that we delivered it to the downside? Now, when we took out this low, we could have also rejected to the upside and break this structure too. But that did not happen. So if you are selling when London opened, maybe this order block or whatever, if you hold it and your stops is above this protected point, you would have been preserved. That's a sell. Do you get? Continuation move to the downside. When New York started too, when New York opened, what do you notice? You can notice how New York raided this London high. You will get a feel here if you have a good. That's why I say you have to have a good working strategy, because all this one will give you is just a clue on where the day is going to go. Your strategy is how you just tag along. And trust me, I have a working strategy that fits this. And that is why if you're watching this video, I really don't want you to miss 500 hours with Optimist. Yes, I really don't want you to miss 500 hours with Optimist. In 500 hours with Optimus, this is all I'll show you and how you can use auction market theory to always tag along. So in this market here, if you go to 5 minutes time frame around here, you'll be able to get a trade sell here, even though it is just a short sell. That's, if you leverage on it well, you can always make a lot of money. That is for the first day. Now let's go to the second day. What do you notice on the second day? This is Tokyo. Can you see how London rated a high? We move down. Now this is would have brought a question within you like, oh, are we continuing yesterday's trend? That's the first question, because at that moment you did not see this. You can't see that. At that moment you did not see that. So this would have been your first question. Okay, is the market being delivered to the sell side? Only for you to see this again. This low being taken out. Now, some people will take that low as a break in market structure. I would take that low as a break in market structure. My ideology does not say price must have a body close before I say it's a break in market structure. I don't believe in that. For example, here, I would have taken this as a break in market structure too. I don't believe this has to be a body close before I take it as a break in market structure. I don't believe it. Any invalidation is a shift. But look at what happened. I will gladly take a loss to find out. So now I know this is a seek and destroy. The buyers were taken out, the sellers were taken out, seek and destroy there. But can you see, it is very important we have that so that the market can deliver itself to the upside. So guess what? I was a buyer in New York. But this is what gave me the clue. After this liquidity run, price delivery to the buy side gave me the clue that, oh, today could be bullish. And we had a bullish day. Now, a lot of time, Tuesday, I'm always holding to Wednesdays. I can be wrong sometimes. In fact, this day I would have held it too. It was until here I would have figured out, although I did not get this, here I can now close it, because when I'm right, I love to win very, very big. But when I'm wrong, I love to just cut my losses short and just say we are unlucky today. So look at this day, Tokyo. Now this is 9:30. I told you 2 hours into the session is still your kill zone. What do you notice? Everybody buying this. Where would they put their stops down here? Can you see? This is an old low being taken out. And that's delivered price to the upside. And you just know, oh, you know what? We are going to keep buying. If you keep buying, you would have still made something. Not big enough. There are days like that you have to close small profits. Not big enough, but it's still something. What about Thursday? Time and price. Look at what happened on Thursday. The first thing Tokyo did was that Tokyo rated this high. But we don't trade Tokyo, right? We don't trade Tokyo. That's not our point. But look at what happened here. This is 12 p.m. Just prior for the news, for the New York to start. I said news. Just prior for New York, that is New York Q zone, we raided some liquidity high up here and we delivered it to the downside. That is why I'm telling you that an invalidation or this doesn't change me from still selling the market. It doesn't. And if you're not convinced enough, what about here when we now have a body close? But can you see that this delivery, now let's do 15 minutes. 6th of August. Look at it here. This aha is being taken out. I know you feel like, Optimus, this is small. But that is the whole London's high. What's left? If that is just a liquidity, I want to see the delivery to the other side. That's just the point. Now, could this also be a delivery to the upside? We will figure it out. Now, can you see this? When this happened, this is now price clearly telling you, no, we are going down. So if you find yourself buying again, you're wrong. You've got to sell. No matter how small you get, you've got to sell the market. These are my best trades. On trades like this, I can throw in 2 lot size there on a $10 account. 2 lot size means if it goes against me, I lose 160. 2 lot size, I don't mind 2RR. I don't mind 2RR. 2 lot size will give you 400. Now, if that is a funded account, that is something. Yes, 2 lot size will give you 400. But the truth about me is that I was selling from here already. Now you will ask the question, why was I selling from here? Because I was taking this as my kill zone liquidity. I did not want to show you this because you will be like, but I'm focused on extreme. No, I'm not focused on extreme. The moment I saw this happening 7 a.m., and price coming all the way down. Now, this consolidation wanted me to feel like, is this a liquidity? Is this a liquidity? But at the end of the day, I'm already selling these shorts. I'm putting my stops here. And then I'm ready to hold. Do I close here? No, I don't close. Can I be wrong? Absolutely. But am I ready to see it through? Yes. Can you see? So that is the 4-hour trade setup you want. This Tuesday trade, holding it out to Wednesday, you would have made maximum profit. This is Wednesday to the downside, you would have made maximum profit. Now, because the following day is NFP, I won't hold over the weekend, over the night. Now, look at this day. Where's the kill zone? Can you see how this low was taken out? Can you see the delivery to the upside? Now, your problem is that you won't be able to buy aggressively here. I don't mind that. I don't mind getting a fill here and putting my stops down here. All of this is EURUSD. EURUSD is 10 pips. That's why I trade gold. If all this stop loss is 10 pips, okay, on a 10K dollars, why? What is 10K dollar profit? What's stopping me from using one lot? Just use one lot. Don't be scared. That's it. Just do it. So that is one of the ways price will always give you directional bias. So on days like this whereby price was not clear, what do? I sit my heart out. I just leave it. There's no direction, you relax. But that is how Killzone works. Killzone can give you clues on where the market is going, but you've got to execute. My win rate back then in 2022, this is how I became a VIP trader with MFF. This was what I do every morning. I just check it out. How can I join it? And I trade continuation move. Now, this is not all my strategies. This is just how I get directional bias. There is something I see differently, auction market theory, which is something I've explained over and over, that would have made me sold from here. That is what made me sold from here. Not really the liquidity run. Do you guys understand this simple principle? This is how you can get funded. Within 3 weeks, you can get funded. If you stick to only EURUSD, yes, you can get funded. These are the days I say you get big moves. Look at this day now. I was buying on this day. Why was I buying? The ideology that a body close is a break in market structure is wrong. The ideology that a body close is a break in market structure is very super wrong. And the ideology that a wick is a liquidity grab is wrong. Look at this. Tokyo coming all the way down. This is London coming all the way down. I don't know we were going to buy. For all I thought, price could still come all the way down here. But then this happened. This is an internal shift. This happened again. I am buying that. This is where I'm buying that. I don't care. I'm buying from here. I'm putting my stops here. This is 22 pips. If this is 22 pips on a 10K, you can use 0.5. If it goes against you, you lose 100. I don't mind using one lot size. And after all, it's Thursday. Can I be stopped out? Yes, I can be stopped out. I don't mind using one lot size. That is what I'm talking about. Can you see the move? So when I'm right, I make it big. When I'm wrong, I lose small. And we just came back to that level of which I did not get that trade set up. Do you get? So we are going to end this video here. This is going to be the part 1 of this series. And then from onwards, yeah, I'll just keep showing you how it has happened, how it happened. Now, it is left for you to find a working strategy that you can combine it with. I make use of fair value gaps, auction market theory, to show me continuation move on how I can tag along. And then I leverage on it. If I'm wrong, I lose small. If I'm right, I win big. When I'm right, I make 4% to 5%. When I'm wrong, I lose 1%. So the odds are always in my favor. So I hope you learn from these guys. And 500 hours with Optimist is going to start September 1st. And it's going to be for 3 months, September 1st to November 30th. And this is one of the things we'll be talking about in 500 hours with Optimist. So I hope you learn from these guys. Till next time, I wish you good luck and good trading. Stay safe.